G'day Internet, Max Wright here, and let's do a little bit of an update. Now, if you've been a subscriber to the channel for a while, you've even been watching my videos for the last, I'd say, 2 months, correct me if I'm wrong. I don't make that many videos, so I'm going back about the last 8 to 10 videos. I've been warning everybody, repeating it over and over again, that the far more likely scenario is that Bitcoin and all the markets are going down, down, down. And I hope I've saved a lot of people a lot of money, at least that. And for the traders, hopefully you've been making money on those shorts that I predicted right here on this channel. And so let's do a little bit of a market update now. Let's do, we'll look at Dow Jones, we'll look at the S&P, we'll talk macroeconomics, and of course we'll finish up on Bitcoin. I'm going to give you some really hard price targets to consider for Bitcoin if you watch all the way to the end. Everything else I've been predicting lately has been worked out very, very good. 2021, not a good year for me. I had a few predictions that did not go right, but we've been back on track this year, predicting things pretty closely. So let's go through it. Right now we're on the Dow Jones, we're on the daily. And you can see this, from way down here, the market's going down, down, down on this trend line, and all of a sudden, that's not down fast enough. The market's decided to come down even faster with this one. Let's go to the next chart. And here we are on the S&P daily, similar story, market following this trend line, down, down, down. All of a sudden, that's not going down fast enough. We need to steepen this curve. Okay, so market's in trouble. We'll take a look at gold. So here we are in the gold chart, and it's just as ugly as everywhere else, from a peak of 2,000 down to nearly 1,800. Sorry, Peter Schiff, your prediction that Bitcoin's correlated, but gold isn't, no, did not turn out right. Everything is correlated at the moment. I could show you the silver charts, I could show you the other charts. Okay, I think you're sick to death of charts. Let's get on to Bitcoin. So here we are now on the Bitcoin chart, and it's a weekly chart. So I've gone from daily to weekly, so to share something with you. Now this, I made a video about this when the price is around about here. I drew out this bear flag. Okay, all these yellow lines I drew out back then, and there was this flagpole, and then this consolidation period here. We're in the middle of this bear flag. And I warned everybody that we're in the middle of this bear flag, and typically what happens is you take the flagpole, you just copy paste it, you drag it over here, and wherever it breaks out, you put the flagpole here, and it's going to give you a fair idea of where we're headed, right? Where we are headed down here. So I warned you about this way back here, that if we break out of the bottom channel of this bear flag, we're going to go a fair way down. Now this would put the Bitcoin price all the way down at $12,000 if this pattern plays out completely. So we'll come back to that. Let's just keep that up our sleeve. But next I want to notice, let's take a look at the anatomy of this flagpole, right? And I'll get my brush out here. And we will see, yes, man, my computer's playing all sorts of tricks today. You gonna give it to me? You're not gonna give it to me. Yes, you are. So we're coming on down here. We have basically, what I'm drawing out here is an A. We have a little sideways action, and then all the way down here. And that was absolutely painful with my computer at the moment, so I'm not going to do that again. You're just going to have to track it with your eye. Ready? So it's got this A, B, C pattern, right? It's a bear flag within the bear flag. So the flagpole itself was this A, B, C. What is this? This is a bear flag, right? Bear flag right in there. Now then we got the bear flag inside the bear flag. And I'm expecting that this flagpole over here is going to do a similar sort of pattern. We might just get 1 or 2 weeks here, maybe going sideways possibly. Let's see. Before we head on down. And I think your first target is going to be down here about $22,000, which is the 200-week moving average. And there's a couple of reasons for that. One is your 200-week moving average. Your other is another thing, which is this head and shoulders pattern. So we have a left shoulder, we have a head, and we have the right shoulder here, and the neckline was here, okay? We broke the neckline, we came back up, actually broke through the neckline a little bit, came back down, a little bit of a fake out there, and now we're coming back down. And if you do this, and let's see if my computer is going to be friendly now, if we go from here, yes, it's working, but meagerly, down to our neckline, not my prettiest line, bring it down to where it broke out, and what do we get? Get a little bit deeper. So we're down at like the 15,000 mark on that one. Yeah, not as tight as I thought it was going to be. I thought it was going to be closer to this 22 mark. But it's a second reason for me between the head and shoulders pattern and the continuation of this bear flag. I think we're going to come all the way down here and visit this 200-week moving average and looking at the 22,000 mark. So I think at some point we'll get down here on the 22,000. Let's give us some dates. Let's got the 30th of May. Let's say late May, early June. I'm anticipating getting somewhere around here about the $20,000 mark. $22,000 I think is where I'm kind of going to jump in and chance myself along. But I am very, very aware of the fact that we may go all the way down to $12,000. Now, I think either way, we're going to get a bounce at 20. I don't think we're just going to rocket through 20. So I think that 22 mark is a good place to have a go at a long. But I will be watching very, very closely the other markets. So let's zoom out, stop thinking about charts here for a minute, and just repeat what I've said on the channel for the last couple of months. Every single thing is correlated. Everything is correlated, right? What that means is the market has been completely destroyed, and the Fed is the price of everything. Whatever the price, and they're telling you, they're crystal clear. They are very blatant in their words. They're telling you, we will crush the economy, we will crush the stock market, we will crush everything in order to bring inflation under control. They've said it outright. They do not care how far the market goes down. Now, is that actually true? No. At some point, they'll have created so much pain, they will have to do the Fed pivot and they will reverse their narrative. But for right now, their narrative is crystal clear. They will crush everything in order to get inflation under control. Now, you guys, Dr. Jeff Ross, I always get Dr. Jeff Ross and Jeff Booth mixed up, but Dr. Jeff Ross, I believe, I've had him on my channel a couple times, and he's made really, really good arguments as to why that we're going to have a really good Q3. And the reason that he presented is because the inflation data they look at is like a 12-month year-on-year. You have to go back 12 months to understand what was the market doing. Was it up? Was it down? Was it sideways? What was it happening? And if you go back, there was a really big change in the markets last year between Q2 and Q3. And so the numbers are poised to look very good come June, July, August. Okay, which means the Fed will be able to say, oh, inflation is not that big of trouble right now. Our year-on-year data is looking better, and their narrative has a chance to change just a little bit, which might be enough for the markets to get back up. So I've got a lot of things coming into confluence there. It's a really important interview, by the way, with Dr. Jeff Ross, I believe. And so I would highly recommend you go back and watch either one of those, the most recent one just being, I think, a few days ago. Listen, that's my prediction. The other thing I want to talk about, I did talk about that, didn't I? This A, B, C in this flagpole, I'm very much expecting an A, B, C. So we maybe will be sideways here for a few days, few weeks. We'll see how it plays out. And then heading on down here to late May, early June, hitting the 200-week moving average. And then if that does break, I think we get all the way down to $12,000. $12,000, and then this bear flag will be completely played out. Whether or not we get down that low, that is, I think, dependent on the Fed and if they change narrative, right? And then if they do change narratives, here's the thing I want you to really, really remember. If they change narrative, which I doesn't know if it's 2 months, 6 months, 12 months, 100 months, I don't know when it is, but when they change narratives, my prediction, gold and Bitcoin will be your two best performers. They will go nuts, in my opinion. So, I don't know, it's a risky game. I would hate for it to turn around right now, and I didn't ape in. I was getting too greedy, waiting to get all the way down to 20, and it just never came, and it goes up now. It's absolutely a possibility. It can happen, but I'm going to be patient. I'm going to let the trade come to me, and I'm going to start to ape in at around about that $22,000 mark. That's where I'm going to go. But with an eye to see if we get just a bounce and then a rollover back down to $12,000. And I'll be making videos around then to help you guys out and navigate that. But that's kind of the process. That's what I'm looking for. And that's just what I've got my eyes on over the next couple of months. So if you don't have any Bitcoin, I think it's absolutely irresponsible not to have any. I have a shit ton of Bitcoin. And so therefore, I don't need to be aping in unless I get the absolute price I want. If you don't have Bitcoin, these prices down here is pretty, 29, you can get better than 29. I think you'll get another snag at the very least, around about this $27,000 mark. I think you'll get that at least, but I'll be waiting out personally because I already have a shit ton of Bitcoin. I'll be waiting for this $22,000 mark before I make my first purchase of this entire bear market, right? And then between 20 and 12, I'm a buyer and I just back up the truck at 12, okay? Hopefully we get to 12. Can't guarantee that we will. That's something you got to decide, manage your portfolios, manage your risk, do all those things that you need to do on your side. Your big clue, whether or not we're going down, is the Fed narrative around this mark here, the 22,000. Do we bounce off 22,000? That's the low. Then a good indication is the markets start going up. You'll see the DXY go down. You'll see DJI go up. You'll see S&P go up. You'll see these things all happen together because the Fed narrative has changed. If that happens, you're looking at a really good idea to get into Bitcoin around the $22,000 mark. If that does not happen, we'll still get a bounce, just won't be a very big one, I think, and it'll roll over again and go down to 12. Okay, let me know in the comments below. Do you like these kinds of videos? I haven't done charts for a long time, but that's a little bit of TA for you. Let me know if you like this stuff, if you want more of this stuff, and let me know, are you holding out for a certain price tag? What is your price that you become a buyer? Let me know in the comments below. Can't wait to find out. All right, guys, hit the like, hit the subscribe, and I'll see you soon. Take care.